This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
I'm back with Paul Frank. He is the president and CEO of PDF Group of Companies, and we are talking about commercial real estate. A lot of people are looking to get into commercial real estate, but it's not for everybody. Let's start off with who is it not for? Like, what are some typical pitfalls you see people fall into when they're getting involved in commercial real estate?
Again, the biggest by far is the understanding of CRE finance and what that loan structure looks like, underwriting in the process. It's just so absolutely different that I don't care if you've got 30 years of experience in flipping and doing single family or even fourplex investments. If you've never engaged in CRE finance, it's shocking to those people. So
is there a way that when you're sitting down and meeting with a potential client and they're saying, hey, I'm interested in getting started in commercial, like, how do you filter, is this person prepared, or are they, have no clue what they're getting themselves into? Yeah, it's
a touchy area because you don't want to lecture or come off as condescending. So we'll ask, and I just got done with a call this morning on this very subject, coaching a couple people on the questions to ask, which is, oh, that's great. What's your strategy on acquiring this property? Let's say they're looking at a $5 million retail center. Are you looking at doing a cash buy, or are you looking to finance? And if they say finance, then you'll ask the question, oh, have you done commercial finance before? And if so, who's your lender? And if the answer is no, that's a huge red flag that there's going to be some education involved in this.
Interesting. So why is that a red flag? Just it means they've never done this before, or?
Yeah, I mean, you like I said, you could have decades of experience in single family finance and turning houses and whatever, but when you get into that commercial space, the underwriting is just absolutely, completely different.
So I thought a cash buyer would be like, okay, that's good, I want to work with that. But you're like, that's not always a good thing.
No, if their answer is cash, that definitely eliminates that CRE finance component. So the finance or the cash answer is a good answer for sure.
Okay, and then because we were talking a little bit too about just people, like, I think we used a dentist example off the air where somebody will come in and say they want to buy a building for easy math, $10 million, and the bank will lend up to 70%, so that's $7 million. And the dentist is like, great, let's go. But what they're not factoring into the equation is that DSCR of 1.3, which, as you said, is pretty common. For the 1.3, does that go up or down based off of your experience or the building's performance or your credit score? Like, is that just a generic number how is that determined?
Yeah. So and going back to that example and to all my dentist friends, I don't mean to pick on them, but what you will see often is that a newly engaged commercial investor, like a dentist, will go to their bank and say, hey, I'm looking at this retail center. It's $10 million. What will you loan on it? And the bank's response will be, oh, we'll loan up to 70% LTV with a 1.3 DSCR. And that DSCR is not understood, and most of the time they won't ask. They understand 70% LTV, so now they go into the acquisition process, get through with the underwriting, and then find out that to meet the DSCR, say a 1.3, is actually a 55% loan, not a 70% loan, and that is an absolute shock over and over. So as far as that floor goes, it moves with the market a little bit. I mean, going back to 2005-06, you would see 1.2, 1.25.
Okay.
Now they've become post that event, they're more conservative, so you'll see a 1.3, 1.35. To answer your question, I don't see it move so much depending on the individual investor. It's more of a bank policy for underwriting.
Okay. All right. So it's not like you can come in, hey, I have a portfolio of $50 million or $100 million. I'm buying this property for $5 million. They'll do a debt CR of 1.4.
Well, 1.4 would be bad.
Yeah.
Right.
Or 1.2, I guess.
Yeah. Then you get into some cross collateralization options and things, but just for your standard off the shelf acquisition, it's usually going to be a 1.3, 1.35. I don't see 1.25s very often anymore.
Okay. And so we were talking about that again, that we'll just say dentist or that professional who got involved in the process and they thought, okay, 70% loan to value, I can do that. They didn't consider the DSCR, the debt service coverage ratio. Where was their commercial agent? Like how in that process? Wouldn't that have been the conversation up front?
For us, yeah. We and as you know, I've been a coach and an athlete most of my life, so that coaching and teaching part is kind of in my DNA, probably from my dad. Saved my butt. So we do a lot of that education part of it, and we're not just brokers, and I don't mean that in a negative standpoint. Because we have the development and the ownership and the construction side, so we understand the full spectrum. In fact, our trademark is dirt to disposition because we sort of have a pretty broad understanding and experience in the space. Okay. But you're correct that you would think that in residential you'll want a pre-qual, right, for somebody that's going to go and buy a house.
Exactly.
We don't have pre-quals because the underwriting of the debt on the asset is based on the performance of the asset. So they can't say, oh, we will loan Dr. Smith $7 million on anything, because that's not the case.
So the loan is based on the property, but the down payment has to come from somewhere. So do you do any qualifying, or do commercial brokers do any qualifying of, hey, how much proof of funds do you have if you're shopping in this price range?
Yeah, it's again, the people with it don't necessarily like to be questioned, so it's you usually know who you're dealing with, and asking those sort of leading questions on the experience side and who they've secured debt with before. If you have somebody that's got a bunch of experience on the residential side, never gotten into the commercial side, then we'll do some more work and questioning to make sure that they're prepared and capable of performing.
That's so wild. You're buying a property. Like, why wouldn't you just provide proof of fund? Why is that an offensive question? I guess I just don't. I agree with you. Like, you're right.
Yeah,
but I just don't understand why it's offensive.
If somebody has a lot of experience in the space and they want to go buy a retail center, and you say, "Hey, can I see proof of funds for $3-4 million?" It's just something that isn't generally done.
It'll burn that relationship.
Yeah, just it doesn't start it off well.
Fair enough. Well, thanks for sharing that info, Paul. When we come back, we will be talking about how real estate agents can expand their business in commercial real estate.
So, Mike, can you imagine having to pay not one, but two mortgages at the same time?
I mean, I wouldn't want to, because I would not get any sleep at all. That's
right.
Just scary.
Well, listen to what happened with Colin. He bought a home in West Sacramento, but he had yet to sell his previous home. So he was in a situation where he was going to have to pay for two mortgages. Then, of course, he reached out to our good friend, Johnny Jennings, with the Tom Daves Real Estate team. And Johnny, listen to this, was able to get him an offer on his home in 2 weeks. Colin was so excited and happy.
Yeah, he finally got to get a good night's sleep, not having to stress about stuff. And that's the benefit of working with the professionals, Johnny Jennings and the Tom Daves Real Estate team. Because when you have someone on your side like Johnny Jennings and the Tom Daves Real Estate team, you don't have to stress about stuff, because you know things are going to get taken care of. And if you're curious what kind of offers you can get on your home, the high end, the low end, or maybe just a cash offer, and be like, I'm done, I need to move on, 2 mortgage payments just sounds scary, give them a call today, 855-TOM-DAVES, or you can always go online to tomdaves.com. That's Tom, DAVES.com, because Johnny Jennings and his team will take very, very good care of you. License number 581837.